What is happening, data dynamos, and welcome back to Bitcoin Bulletin. The financial world is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest shifts. Today, we've got a packed show that you absolutely cannot afford to miss. We're diving deep into the market-moving news that's shaping the future, from game-changing stock strategies to seismic shifts in digital asset valuations. Let's jump right in. First up, we're dissecting a bold corporate strategy that has the markets buzzing. Next, we're exploring the intricate dance between emerging technologies and established digital assets, examining how one is influencing the other in a significant capital reallocation. Then, we're bringing you an exclusive report from a major financial institution that suggests a fundamental shift in how we value a leading digital currency, with implications for its comparison to traditional assets. And finally, we're looking at a bold prediction from a top analyst that could see a major digital asset potentially eclipse another, based on evolving network value and adoption trends. Stick around for all the details and make sure you hit that like, subscribe, and notification bell so you never miss an update. Is this stock a rocket or a wreck? This strategy stock is making waves, but is it a surefire bet or a high-risk gamble? We're diving into the latest analysis surrounding a company that has dramatically altered its corporate strategy, transforming itself into a significant player in the digital asset space. With a massive holding of 629,000 Bitcoin, currently valued at a staggering $71 billion, this company's valuation is inextricably linked to the volatile swings of the cryptocurrency market. Analysts are divided, with some projecting nearly 100% upside potential, while historical performance suggests that the risks might be significantly outweighing the rewards. This presents a critical question for investors. Is this stock a launchpad to massive gains or a potential crash waiting to happen? The company's unconventional approach to corporate finance, by leveraging its balance sheet to acquire a substantial amount of Bitcoin, has created a unique investment profile. It's no longer just a software company, it's a de facto Bitcoin surrogate, meaning its stock price movements closely mirror those of the digital currency itself. This correlation creates both opportunities and significant dangers. For those looking for exposure to Bitcoin through traditional equity markets, this stock might seem like an attractive option. However, the inherent volatility of Bitcoin, amplified by the leverage and corporate structure of the company, could lead to dramatic price swings. The report highlights that while the upside potential is considerable, particularly if Bitcoin continues its upward trajectory, the downside risk is equally substantial. Investors need to carefully weigh the potential for astronomical gains against the possibility of significant losses. The narrative around this stock is complex, touching on themes of corporate innovation, digital asset adoption, and risk management. As the market continues to digest the implications of such a bold strategy, all eyes are on the company's next move and how Bitcoin's price action will dictate its fate. The debate rages on: a brilliant strategic pivot or a precarious gamble with the company's future? The answer could have profound implications for investors and the broader market perception of corporate Bitcoin holdings. But before we get too deep into that, what if the biggest shifts aren't just in how companies hold assets, but how entire technological sectors are reallocating capital? AI's ascent triggers Bitcoin's retreat. We're witnessing a fascinating interplay between the explosive growth of artificial intelligence and the performance of major digital assets, prompting a significant capital reallocation across the financial landscape. As the AI sector continues its meteoric rise, attracting immense investment and fueling innovation, a noticeable shift in market dynamics is occurring, impacting traditional assets and digital currencies alike. This phenomenon isn't just about one sector outperforming another. It's about a broader macroeconomic trend where capital is flowing towards areas perceived to offer the most significant growth and technological advancement. The surge in AI development, driven by breakthroughs in machine learning, generative models, and data processing, has captured the imagination of investors and corporations worldwide. This has led to a substantial influx of funds into AI-focused companies, research, and infrastructure, creating a powerful gravitational pull on global investment capital. Consequently, Other asset classes, including digital assets like Bitcoin, are experiencing the downstream effects of this capital reallocation. While Bitcoin has demonstrated remarkable resilience and growth over the years, its performance can be influenced by broader market sentiment and the availability of investment capital. When significant capital is diverted towards a rapidly expanding sector like AI, it can create headwinds for other markets, leading to price corrections or slower growth. This dynamic suggests that the current market environment is not simply about the intrinsic value of Bitcoin or the promise of AI, but rather about the strategic decisions investors are making in response to evolving technological landscapes and perceived opportunities. The narrative is complex, involving not just technological progress, but also investor psychology, risk appetite, and the search for alpha in a competitive market. Analysts are closely monitoring this capital flow, seeking to understand the long-term implications for both the AI sector and the digital asset market. Is this a temporary recalibration or a fundamental shift in investment priorities that could reshape portfolios for years to come? The interplay between AI's ascent and Bitcoin's retreat is a critical story to follow, offering insights into the future direction of investment and technological innovation. Now, even as capital flows shift, some are arguing that certain digital assets are still significantly undervalued compared to traditional benchmarks, suggesting an opportunity is being missed. Bitcoin Undervalued Versus Gold, JPMorgan Says. In a significant development that could reshape investor perceptions, a leading financial institution, JPMorgan, has issued a report suggesting that Bitcoin is currently undervalued when compared to gold, especially as the digital asset's volatility experiences a historic collapse. The report highlights a dramatic decrease in Bitcoin's 6-month rolling volatility, which has fallen from nearly 60% at the beginning of the year to approximately 30% today, marking the lowest level on record. This convergence of volatility levels between Bitcoin and gold is a critical observation, as it significantly alters the risk-reward profile of the digital asset. Historically, Bitcoin's high volatility has been both a draw for speculative investors and a deterrent for more conservative institutions. However, with its volatility now approaching that of gold, the world's traditional safe haven asset, the gap between them has narrowed to its lowest point ever. JPMorgan's analysis posits that on a volatility-adjusted basis, Bitcoin's market capitalization would need to increase by 13% to match gold's $5 trillion in private investment. This calculation implies that, according to their models, Bitcoin is currently undervalued by roughly $16,000 relative to gold, indicating substantial room for upward price movement. Analysts at the bank, led by Nikolaos Panagurtsoglou, attribute this trend to the accelerating purchases by corporate treasuries, which now collectively hold over 6% of the total Bitcoin supply. This corporate adoption is seen as echoing the impact of central bank quantitative easing on bond market volatility, suggesting a maturing and stabilizing effect on Bitcoin's price action. Furthermore, the report points to the increasing inclusion of companies with Bitcoin holdings in equity indexes, which is drawing passive capital inflows. Examples cited include Metaplanet's upgrade into FTSE Russell's mid-cap category and Kindly MD's substantial Bitcoin buy-in. The growing participation of institutional players and the trend towards incorporating digital assets into traditional financial frameworks suggest a broader acceptance and integration of Bitcoin into the global financial system. This shift, driven by falling volatility and increasing institutional adoption, positions Bitcoin as a potentially more attractive asset for institutional portfolios seeking diversification and growth. The implication is clear. Bitcoin may be transitioning from a purely speculative asset to one that holds fundamental value, comparable to or even exceeding traditional assets like gold, especially when adjusted for risk. But what if the future isn't just about comparing Bitcoin to gold, but about another digital asset potentially challenging Bitcoin's dominance altogether? Ethereum has 50% chance of flipping Bitcoin, says Tom Lee. In a bold prediction that's sending ripples through the digital asset community, Fundstrat co-founder and Bitmine chairman Tom Lee has stated there's at least a 50% chance that Ethereum could surpass Bitcoin in network value. Lee, a closely watched analyst in the financial markets, shared his insights in a recent interview, highlighting the growing institutional and government sponsorship of Bitcoin, but emphasizing Ethereum's unique position as a financial infrastructure layer. He argues that this foundational role gives Ethereum a distinct advantage and significant upside potential. Lee pointed out that Ethereum has faced its own set of challenges, including its transition to a proof-of-stake consensus mechanism and internal adjustments. However, he believes these conditions have shifted favorably. Ethereum sort of adjusted its own internal problems, including improving the inflation rate, etc. So there's not too much ETH floating, he explained, suggesting that supply dynamics are becoming more favorable. He identified 3 key drivers poised to propel Ethereum forward: the proliferation of stablecoins, supportive U.S. policy initiatives like the Genius Act and Project Crypto, and the increasingly critical intersection of artificial intelligence with blockchain technology. Lee asserts that these factors will significantly benefit Ethereum, which he describes as the most reliable smart contract platform, boasting zero downtime. While acknowledging that scalability remains a challenge, he noted that solutions like Layer 2 protocols are actively addressing this issue. The role of Wall Street is also seen as pivotal. If Wall Street is the reason we're gonna see the next wave, Wall Street wants 100% uptime. They don't care about speed because they can build on the Layer 2s, Lee stated, underscoring that financial institutions are likely to adopt Ethereum as their primary blockchain infrastructure. A significant differentiator for Ethereum, according to Lee, is its native staking yield, which offers a distinct advantage for digital asset treasuries compared to Bitcoin ETFs. Ethereum pays a native yield, a staking yield. ETFs have a liquidity requirement. A crypto and ETH treasury can stake 100% of the yield, he elaborated. Contrasting the price dynamics, Lee expressed continued bullishness on Bitcoin, projecting a potential year-end price of $200,000. However, he sees even greater upside for Ethereum, forecasting a 5-year outlook that could see ETH reach around $60,000. Lee concluded by emphasizing Ethereum's central role in the next phase of crypto adoption, stating, Ethereum is sort of the network value beneficiary, benefiting from both Wall Street adoption and AI integration. And that wraps up our deep dive into these market-shaking stories. We've covered a revolutionary stock strategy, the impact of AI on digital assets, Bitcoin's valuation against gold, and the potential flip for Ethereum. That's a wrap on today's explosive updates. We saw a stock strategy that's making massive bets on Bitcoin, discussed how AI's rise might be impacting crypto capital flows, learned why JPMorgan thinks Bitcoin is undervalued against gold, and heard predictions that Ethereum could soon flip Bitcoin. Don't miss out on any future market moves. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, and follow us on all social media platforms for real-time updates. We'll see you next time.